5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Reopen for business. A record 43-day government shutdown comes to an end as President Trump signs a spending bill. But the data void could linger. Look out, OpenAI. Alibaba is said to be preparing a major revamp of its flagship mobile AI app to resemble ChatGPT. Plus, don't miss our exclusive interview with Ukrainian President Volodymyr Zelenskiy later this hour. So let's take a look at those markets because there was a lot of churn yesterday. Healthcare did well. For example, consumer discretionary didn't do so well. We finished the session with the S&P fractionally higher, I should say, and the Nasdaq 100 fractionally lower. We're actually pointed lower again today, even as we have a resolution to the government shutdown. I guess the big question is now, when do we get the data? What data do we get? And of what quality is it? Let's take a look at the bond universe because we're also not seeing too much movement as we await some of that data, which could come this week, but is unlikely to. 357. We're back down to 407 on the 10-year yield and hanging out there, and back down to 466. So a little bit of curve flattening over the last couple of days since Veterans Day. And then I did want to point to some of the commodities as well, because this is a fifth straight day of gains for gold. If you look, we're up another almost 1%. Back above $4,200. As for silver, if we get to 54, 47, 48, that kind of territory, we'll be at a record. So those precious metals are on a tear. All right, let's get to some individual market movers now this pre-market session. Here's Valerie Teitel in London. Valerie.
Good morning, Bonnie. Let's start with a check on Alibaba. The ADRs of this Chinese e-commerce giant are flying higher in pre-market, up near 5%. And that comes after that they have announced some big overhauls when it comes to their flagship AI app. They want it to challenge ChatGPT, and they've announced they want to become a fully functioning AI agent and integrating agentic AI shopping into that app. So Alibaba getting a boost from this recent announcement. Let's move on to tech earnings. Cisco out with earnings after the bell yesterday, and they did raise their 2026 guidance. And these shares are higher by nearly 7% in the pre-market. Cisco really convincing investors that its business is in the right place to capture all of this AI spending after this AI boom. It's really been a make or break for these tech companies, whether they can convince investors and show it in their bottom line that they are getting some of this AI spending. Cisco was able to do that in their earnings release yesterday. Lastly, I want to end with Dollar Tree. This is more evidence, perhaps, of a K-shaped economy. A double downgrade from Goldman Sachs. Dollar Tree shares down near 3%. Now, Goldman is citing the weakness in the lower-end consumer as the main reason for this double downgrade. Also, the perception of the value of Dollar Tree's goods waning in consumers' minds. So a bit of a brand reshuffle there when it comes to Dollar Tree in the discount market. Bonnie?
Valerie, thank you so much. Valerie Teitel there in London. And we may not be getting the October economic data this week, but we will look ahead to the rest of the year with Stephanie Roth of Wolfe Research later this hour. And we'll do that as the longest U.S. government shutdown in history comes to an end.
I'll sign a bill exactly like we asked Democrats to send us all along many days ago. This cost the country $1.5 trillion, this little excursion that they took us on. It's an honor now to sign this incredible bill and get our country working again. Thank you very much.
Joining us now is Bloomberg's Roz Matheson. Roz, I like how our Washington edition newsletter puts it. It's saying the government is looking for the on switch. When can we expect to start seeing data, and will that October data ever have been collected?
Well, that is one of the questions as this government restarts. It's a bit like a large ship that stopped and has to restart, and it doesn't do that very quickly. And in between, what kind of data has been lost, as you say, it's unclear what we're going to get with the picture for October in terms of jobs, CPI, even retail sales. Do we get snippets of that data? Does some of it not come at all? Does it get smushed together with the next month? So you get 2 months of data in one go, which makes it a lot harder to see the real picture there for the economy and to pass through some of that noise. And so it's unclear at this stage what we're going to get out of that. And that makes it very difficult to understand not just the impact of the shutdown on the economy in the immediate term, but the real underlying picture of health of the economy, including the labour market. And so it's yet to know what the calendar is going to be like. But like the other aspects of the restart, these things will come in bits and pieces in the next couple of days. And over the next couple of weeks, we will get a full restart of the government.
Yes, and apparently this week is the week for establishment data collection for the November jobs report. So we're already way out, and it's already Thursday of this week. Meantime, Democrats have returned to pressing Trump on Epstein. And I'm curious about this because, he was very much happy to have things to divert from the Epstein ties. But they are back now in the spotlight. Will there be legislation, Roz? Will Democrats find a way to bring legislation to compel the Justice Department to release the Epstein files?
Well, that is the question. The House Speaker has said that he's ready to potentially bring a vote on this. And it is an issue that crosses the divide, to the chagrin of the US president. It's not just Democrats who are pushing on this, but it's Republicans also saying we want more information about this. I mean, Donald Trump says he cut ties with Jeffrey Epstein decades ago. He said he was unaware of Epstein's activities, but there was the release again just this week of 20,000 further pages of emails, some of which where Epstein seems to be insinuating that Donald Trump spent time in the house of one of Epstein's victims. So this issue is just not going away from Donald Trump. He was probably hoping to have a few clear days as the shutdown ended, and he's accusing the Democrats of trying to bring this issue back. Now the shutdown, in fact, has come to a close. But the underlying point in all of this is it's not just the Democrats who are pushing for the full release of some of these documents. It is Republicans too, and there is that momentum potentially in the House to do so.
Exactly, and his approval ratings have been going lower and lower, Roz. I mean, he's not going to be too pleased about that, but is there anything that he can do to rally a base that wants the Epstein files?
Well, he has been coming out quite aggressively against it, and repeatedly so over the months. But the fact that it doesn't go away does show again that this is an issue that does have issues of support across the divide in Washington. How much it resonates with ordinary Americans is perhaps a different question, but at least a lot of Republicans seem to feel that they also want a bit more clarity from the US president on it. Does it resonate again with voters? Would it be a factor in midterms? That's very hard to say. I mean, people in the end will probably be looking at the midterms more around issues around healthcare and so on, all the questions around Obamacare subsidies. But within Washington, this is an issue that's consuming Democrats and Republicans alike. And Donald Trump has said to Republicans, you need to stop this, you need to cut it out. And yet they're not. In many other issues, they do seem to heed his word. But on this one in particular, they do feel that they are owed transparency.
Yeah, absolutely. Roz, thank you so much. Roz Matheson there for us. Much appreciated. Well, the UK economy barely grew in the last quarter, with GDP rising just 0.1% compared to 0.3% in the second quarter. That's after September's activity was hit by a cyber attack. Also, fears of tax hikes found weaker against the dollar on the back of that data. Bloomberg's Lizzie Burden joins us now from London. So apparently auto manufacturing had a big impact on this GDP report. Lizzie, can you give us a few more details?
You're absolutely right. And it comes back to Jaguar Land Rover, Vonnie. They had this cyber attack, and that seems to have weighed on car production. Overall, the UK economy basically grinding to a halt in the third quarter. But it's not just JLR. That is one of the good things here, because actually it means that maybe there'll be a reversal of that fortune for the car industry. You've also got the global cross currents, and you've got this fear, as you mentioned, of looming tax hikes, because we have a budget round the corner, and that's why consumers are holding on to their savings. It is not the backdrop that the Chancellor Rachel Reeves would have liked before that budget on November the 26th. We just had the unemployment rate rising to 5% on Tuesday, the highest level since the pandemic. The silver lining, though, is that it looks like we are on for a December rate cut. Traders pricing about an 80% chance of that now. You mentioned the market reaction. You had the pound dipping and then reversing. I'd say that's more to do with the dollar moves here, because if you look to gilts, they've been pretty steady.
Yeah, and that was surprising in itself almost, Lizzie, right? So you say there's an 80% chance priced in, but wouldn't you have thought that there might be a little bit more movement today after the GDP data? Because it does strengthen the case for the BOE, no?
Yeah, I would have thought so as well. As I say, there are lots of cross currents going on here. Perhaps it's that traders were as convinced as they needed to be that this cut is coming. As we saw that labour market data on Tuesday, strengthening the case for the doves on the committee. But you still have lots of data to come, Vonnie. You've got another CPI print, 2 rounds of jobs data, and that all-important budget. The BOE needs to see how much fiscal tightening Rachel Reeves has got up her sleeve before it votes on another cut.
So just something like 13 days before that budget, Lizzie, does Rachel Reeves already know what she's going to put out there, or is it still in flux, do you think?
Well, the Times of London had reported, Vonnie, that she put her plans to the fiscal watchdog, the Office for Budget Responsibility, and that those plans included breaking the manifesto, raising income tax. But I would say that the Chancellor will have an eye on all of this data as we inch towards the budget. She'll be dotting the I's and crossing the T's all the way up to the 26th of November. We have a report just this morning that she's looking at focusing on regulated prices to try to bring down inflation so that the OBR will judge she can have more headroom. It's something that the Bank of England Governor Andrew Bailey had recommended she do. But of course, energy so affected by global markets and the oil price. Let's see if the OBR will pass on that plan.
Yeah, absolutely. Lizzie, thank you so much. That is Lizzie Burden there over in London. And shifting focus to the AI race, Alibaba readying an overhaul of its mobile AI app in the coming months to compete with OpenAI's ChatGPT and plans to rename it Qwen. Shares getting a boost in pre-market trading. Bloomberg Intelligence analyst Matthew Bloxham joins us now with the latest. So, Matt, and I just want to point out that in the last hour, 2 hours, Tencent also just beat estimates. So that's also some more news. But focusing on Alibaba, it wants to make a fully functioning AI agent. How would that make it different, better than ChatGPT, perhaps?
Yeah, I mean, I think the first thing to point out is that right now ChatGPT and Alibaba's AI equivalent don't really compete with each other. The ChatGPT model isn't available in China, and although the Alibaba capabilities can be accessed in the US, that they're incredibly small. So I think this is more about Alibaba kind of catching up and emulating a similar vision to what ChatGPT or OpenAI has for ChatGPT. And so this would kind of go beyond just being able to kind of interact with a kind of chat interface to kind of understand information, maybe kind of search for your next holiday, but actually kind of become more agentic, which means you can just kind of let the AI, off the leash, if you like, and just go and find something for you that it knows matches your preferences, make the booking and come back to and say, here, your next holiday is booked, there you go, enjoy. But I think there's a long way to go before we actually kind of get to that point. But, it's interesting that they are looking to develop this capability and ramp their investments.
And they're obviously also in competition with ByteDance and Tencent here. It is a consumer-facing product. What are the options for it to monetize and monetize quickly?
Yeah, that's right. And that's the other point. Alibaba historically with the Qwen platforms been more about kind of serving businesses. So going more aggressively into consumer is a big shift. I mean, I guess you've got the kind of two obvious options. One would be an ad-funded model, and the other would be to be a subscription model. And obviously, ChatGPT's gone much more down the subscription model. So I think they'll have to evaluate that. They'll probably try various different things and see what kind of really lands. But certainly ChatGPT is going down the subscription model right now.
So moving to Cisco then, Matt, because we got an update from Cisco last night after the close, giving an upbeat sales forecast. It appears all is well. Cisco obviously making chips and networking gear to connect better data centers and server racks and so on. What does this mean for the AI spend?
Yeah, I think Cisco is definitely a big beneficiary of all this incremental spend we're seeing, particularly from the big hyperscalers and everything that's going into data centers. They provide a lot of the core server connectivity within data centers, a lot of the kind of broader internet connectivity. Obviously, traffic's growing, and they've also kind of pivoted more to invest a lot more in data security, and that's becoming incredibly important, both for the hyperscalers but for enterprises too. And so they're benefiting from all that kind of shift in investment towards AI and the incremental dollars it's bringing. It's about a 2% upgrade to the full year guidance, so they're looking at about $60 to $61 billion now. It's $1 billion increase, and I think most analysts expect that there's still some conservatism in that number, and that probably they can do better than that on a full year basis.
All right, Matt, we'll speak to you again a little later on. Thank you so much for all that context. That is Matthew Bloxham of Bloomberg Intelligence. Now to other top stories trending on the terminal this morning. According to documents released by Democrats, former Treasury Secretary Larry Summers and a Goldman Sachs lawyer exchanged emails with convicted sex offender Jeffrey Epstein that criticized President Donald Trump. In one October 2017 exchange, Summers predicted to Epstein that Trump's, quote, world will collapse. President Xi Jinping will not join the G20 summit later this month, a blow to host South Africa. President Trump will also not be attending. The Chinese leader has pulled back extensively on international travel since the pandemic, except for major summits, like the one he had with Trump in South Korea. And the IEA increased its estimates for a record global oil surplus next year for a sixth consecutive month. World oil supplies will exceed demand in 2026 by just more than 4 million barrels a day, a slight increase from last month. The agency has made upward revisions every month since June. Coming up, Ukrainian President Volodymyr Zelenskiy says his country's survival depends on aid from allies in the war with Russia. We'll bring you more from that exclusive interview next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Ukrainian President Volodymyr Zelenskiy imploring EU allies to overcome their divisions on the use of frozen Russian assets, saying fresh funding is critical for his war-battered economy to stay in the fight against Moscow. Bloomberg's chief European correspondent Oliver Crook spoke exclusively with the president in Kyiv.
We need it very much. This is one of the types of real sanctions. Russia has to pay for this war. They began this war and they have to pay. This is a real fact, how they can pay. And we need this money. We will spend this money on renovation. And of course, we need air defense. And you know, we need air defense from the United States. And we have European systems. We need this air defense from European leaders. This is all very important. And of course, we need to finance our drone production, which is huge. We need to finance it, and we don't have additional money. And this is the way, and this is fair, I think. They began this war, and they want to continue it. That's why they have to pay.
Is this the most significant thing European leaders can do right now to help you?
Of course, we can get more than 140 billion for today.
Right.
We can get it. By the way, from the United States, it will be also a good signal, you know, like with energy, like sanctions of the White House, of President.
What?
Yes, it's about Lukoil and Rosneft and Lukoil. Important step. And it brought some our partners, European partners, also to some strong decisions. And we've been happy that there have been 19th package. We are thankful to Europeans for this. So that's why if President Trump, for example, will decide that he has I think more than 5 billion he has of assets, maybe he will decide to spend this money. It will help.
Have you discussed alternatives with allies about Russian assets if that does not come through? Is there an alternative plan? Is there a plan B?
No, they understand that we need their support, and if I hope, God bless, we will get this decision. But if they will not have this decision, of course, we together will find we have to find alternatives. It's a question of our surviving. That's why we need it very much, and I count on partners.
And on the question of, you brought Donald Trump in connection to the Europeans. Why did it take Donald Trump to get the Europeans to ban Russian LNG?
He always said that he wants Europe to put sanctions on Russian energy. He always said that was during our meeting and etc. And you know that some countries in Europe, they really used it. Yes, it was not the case of 1 year. In the case of, I think, about 30 years, they had relations and a lot of different factories. They have common businesses. It's understandable. And then President of the United States, he said, okay, I'm ready, and if Europe will be ready. And of course, this decision, this way of sanctions was good. As I said to you, that it was American sanctions and European sanctions. It like split, and they came together. And I think this is good way. It was good way. And that's the same about assets. That's why I raised it about assets, that there are some assets in the United States. If the United States can do it, it will be helpful for European decisions also.
Ukrainian President Volodymyr Zelenskiy speaking there with Bloomberg's Oliver Crook. Coming up, one story making the headlines across major news outlets today. The end to the longest government shutdown in U.S. history. More on that coming up next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for the top story making headlines across the various front pages. On most of the major newspapers, as you can see today, the official end to the longest government shutdown in U.S. history. President Donald Trump signing an interim spending package that will fund most of the government through January 30th. Federal workers are expected to be back on the job starting today, Thursday. However, it could still take days or even weeks for the federal bureaucracy to fully restart after being closed since October 1st. That is 43 days. Let's take a look at how markets are reacting to that. We are expecting a flood of data, so a little bit of trepidation, at least in equity index futures and the dollar, as you can see. Coming up, we're going to speak with Stephanie Roth of Wolfe Research. It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Reopen for business. A record 43-day government shutdown comes to an end as President Trump signs a spending bill. But the data void could linger. Look out, OpenAI. Alibaba is said to be preparing a major revamp of its flagship mobile AI app to resemble ChatGPT. Plus, into the final stretch, we'll preview Disney earnings coming out before the bell with big expectations for its parks business. So let's take a look at where markets stand this Thursday. We finally have the government reopen after 43 long days. Futures pointed fractionally lower for obviously the Nasdaq and the S&P 500. Now the Nasdaq 100 was down fractionally yesterday. The S&P rose fractionally, but there was a lot of churn underneath. Healthcare led gains, consumer discretionary suffered losses. Then let's take a look at the bond universe, because there'll be a lot of questions as to how the Fed is going to interpret whatever data does come out. We have the curve just flattening a little bit. The 2-year yield 357, the 10-year well below 410, and the 30-year back around that 465 mark. And then I wanted to point to gold and silver as well, because it's another day, a fifth straight day of gains for gold, up almost 1% now, back above $4,200. And we're inching ever closer to a record. For silver, we're watching 54, 47, 48, that kind of range there for silver, up 1.4% today. So we'll get into what all of these market moves mean in just a moment, but let's get to some individual pre-market movers. Over to London and Valerie Titel. Valerie.
Good morning, Bonnie. Let's start with a check on Alibaba. As you mentioned, they have announced a revamp of their AI app, and we are seeing shares headed higher in the pre-market. Their ADRs up by nearly 5%. Now, this marks the biggest move ever by Alibaba to try and wring revenue from these AI services. They want to add agentic shopping into the app, and they do plan to launch it overseas. Staying with tech, moving to earnings, Cisco out with some decent earnings after the bell yesterday, raising their 2026 guidance after they're able to convince investors that their business is in the right place to capture this AI spending. Cisco shares up near 7%. Vonnie, they have to move higher by 11% today in order to capture their .com level high. So keep a watch out for that. Lastly, let's end with Dollar Tree, a double downgrade from Goldman Sachs, citing concerns about the lower end consumer. We're seeing shares of Dollar Tree trade lower after this downgrade, falling by nearly 3%. Bonnie?
Valerie, a different world, but nevertheless one to watch for that statistic on Cisco there. Thank you. That's Valerie Titel. Wolfe Research chief economist Stephanie Roth writes that the October data will be messy given the trials of collecting data more than a month old. November data, though, will be a lot more accurate. This week is the establishment survey collection week. So how will all the data that we do get be interpreted at the Federal Reserve? I'm pleased to say Stephanie Roth joins us now. So Stephanie, obviously it's going to be difficult. What do you know about what data we're going to get and how useful it will be, first of all?
Yeah, so the September data we'll get in the first couple of prints that will be a clean breed. So we'll get the September payrolls report, which is going to be one of the more important ones that we're going to get for a while. That one's a clean read of the economy. We'll get a sense of, is the trend in payrolls actually roughly the 29,000 in terms of the most recent 3-month average, or is it actually has shifted up a bit? We're expecting that it should come in around 60,000. It should be a decent print and potentially some upward revisions to August, which might reset the expectation in terms of where the economy currently is trending. We'll be getting the retail sales data, we'll be getting industrial production, kind of the suite of September data will be important. The October data is going to be messy, and the White House just said yesterday that we might ultimately never get the payrolls data for the month of October. That said, other measures like retail sales, industrial production for October, we should probably get, because that's easier to measure. It's not survey-based the same way.
What does the Fed do if it gets mixed signals? Because on the one hand, this is kind of, I don't want to say old, but it's definitely older data at this point. And if it tells a story that we weren't expecting, is the Fed supposed to act on that, given that, as you say, it's messy?
So in the most recent FOMC, Powell alluded to the fact that if they had no additional data, they'd be more likely to wait it out and get more clarity. That said, the news trends that we've seen in the past couple months, a couple weeks since the most recent FOMC, the data they have gotten have pointed to a further slowdown. So our expectation is they'll probably just end up cutting, because the data will be so messy, and if anything, pointing to some softer signals. There's still concerns around the labor market, so they're more likely to cut rather than not, just given the news flow.
How much will the market be able to digest this flood of data that we're expecting? You know, I mean, there's only a few weeks left. Was it 33 trading days or something between now and the end of the year? And that's a lot to digest.
Yeah, and we're in an environment where things are not that bad, and we're not headed for anything that's a more material slowdown. So it could be any news is good news, in the sense that if the data come in a little bit softer, then that means the Fed could be cutting a little bit more. If the data come in firmer, it means the economy is on decent footing. So it could be one of those environments where just the news is largely positive, and if it's negative, you can kind of dismiss it to some extent too.
So the CBO estimated that a 6-week government closure would lower real GDP by 1.5 percentage points. I mean, we got that. Does that make it, at the margin, more likely that the Fed will cut in December, be more accommodative?
No, because that same CBO report also said the actual permanent damage to GDP is in the realm of $11 to $14 billion. So while it's a temporary, so-called 1.5% hit to GDP, this is largely due to back pay in terms of government workers. Once that actually flows through, then you'll see a bounce in Q1. So the Fed will likely look at it as sort of a one-time in nature. They'll expect that you'll see the bounce back earlier next year, in which case they'll be focusing on what's kind of going on from a private perspective.
Stephanie, have you been thinking at all about what the retirement of Atlanta Fed President Raphael Bostic means for next year's Fed? It does remove a hawkish voice at a time when doves are rising anyway.
Yeah. So, I mean, he wasn't going to be voting next year. So from that perspective, it shouldn't really change the trajectory for 2026. Markets didn't really react that much to the news. So our expectation is they'll put in someone else. There won't be issues in terms of actually getting them confirmed, because that was a concern a couple months ago. Is the board going to reject the confirmations come in February? We now see that the Fed is a lot more independent than many feared a couple months ago. So our expectation is it won't really have that big of a factor, and it's also more like a 2027 story, just given the Atlanta Fed doesn't vote until then.
You're fairly positive on the outlook for consumption. I'm curious, where did the K-shaped consumer go then?
Yeah, and it's been a problem. We've seen a big deceleration, especially in the lower end consumer, while everybody else is kind of doing okay. Our expectation is for next year, you'll see the consumer look a little bit better, especially that low-income consumer could be supported in part because our expectation is the economy will stabilize a bit. We've had a big deceleration because of economic uncertainty from tariffs. On top of that, you'll have significant stimulus coming from One Big Beautiful Bill. This will come around tax season. On average, some 20 million sort of lower-end consumers are going to get about a $1,400 stimulus check, ranging from $500 to $3,000. On top of that, you'll have potential sort of wage pressure for blue-collar workers.
And none of that will feed too much into inflation?
It should be modest. At the margin, we do expect inflation could be elevated. We're talking about 3% inflation for a while. So this is a challenge for the Fed, but it's not so much a problem for the consumer, because it's elevated inflation, but not so high.
So then after we get through December, what's your outlook for the Fed rate path into, say, the first 3 to 6 months of next year?
So our expectation is they'll cut in December, and then for next year they'll cut twice more. So it will probably happen with the new Fed chair. So Powell will probably have one more hike, one more cut under his belt, and then 2 more from the next Fed chair.
All right, Stephanie. Can't wait to see how it all plays out. Thank you so much for visiting us in studio today. That is Stephanie Roth of Wolfe Research. Now, 2 other top stories trending on the terminal this morning. Europe's CLO managers have been selling assets at a high volume, with October seeing the highest volume of sales since records began. This follows JP Morgan Chase CEO Jamie Dimon's cockroach warning. An SEC filing shows Michael Burry is closing his hedge fund, Scion Asset Management. As of March, the fund had $154 million in assets under management. Burry has not directly addressed the closure, but has posted on social media that he will be, quote, on to much better things. Cliff Asness, the billionaire co-founder and chief investment officer of AQR, said the hedge fund is weighing an expansion into sports betting. He said on the Odd Lots podcast that sports analytics are similar to what AQR does, and that the firm's quantitative expertise could be applied to sports betting. Coming up, more on the funding bill that ended an historic U.S. government shutdown. That's next. This is Bloomberg.
Sign a bill exactly like we asked Democrats to send us all along many days ago. This cost the country $1.5 trillion, this little excursion that they took us on. It's an honor now to sign this incredible bill and get our country working again. Thank you.
After 43 days, President Trump signing legislation to end the longest government shutdown in U.S. history. Joining us now from Washington is Bloomberg's John Harney. So, John, you've seen a few of these. Workers have been ordered back from today. What happens? Do people typically all show up again this first day of reopening?
Well, this will have to take some time for the federal government, which is a huge, enormous organization, to get back into operation. Thursday today, workers will start coming back. They will begin getting paid. Most of them were not paid during this period over the weekend. Then we have then as far as people who receive food stamps, SNAP benefits, though that will take time too, because each state, all 50 states, have different methods of payment. But the payments will begin soon. But at the same time, though, these people have been without aid since last weekend. Flights are still have still been affected. And Transportation Secretary Duffy said that could last for another week or so, even as we're heading toward the Thanksgiving holiday and Christmas, of course. So anyway, things will come back slowly. Yeah, exactly. So the White House says that October jobs data and also the CPI data are unlikely to be released. I guess that's because perhaps collection would be difficult. Do we know anything about that from anybody inside the agencies? Well, that's a good. I mean, they were not able to get collect this data. So apparently it may well never be known. And so markets, companies investors have been sort of flying blind. They've been looking at privately data collected by private organizations, but that's another thing that it's going to take some time to restore, and when we'll get accurate, we can be assured of more accurate information. So the Democrats have returned to pressing Trump on the Epstein ties, and we got more emails released just this week. How likely is it that there will be legislation compelling the Justice Department to release the Epstein files, John? Well, one consequence of the end of the shutdown was the swearing in of Representative Grijalva of Arizona. She replaced her father, who died earlier this year, and she was not sworn in during the shutdown. Her vote would put in place a bill to compel the Justice Department to release all the files. Now, President Trump has said this is all old news, and it's an effort by the Democrats to distract voters and others from their own failures, particularly what he considers their negligence in bringing about the shutdown. But Speaker Mike Johnson has said now there will be a vote in coming days or weeks, and we'll see how the outcome of that.
Yep.
Several Republicans have said they're going to vote for it.
Definitely a bipartisan issue here. John, thank you so much. Bloomberg's John Harney in Washington. Shifting focus now to the AI race, Alibaba preparing an overhaul of its main mobile AI app in the coming months to help it more closely resemble OpenAI's ChatGPT. Bloomberg Intelligence analyst Matthew Bloxham joins now with the latest. So what does Alibaba want to do, and how would it compete in this way with Tencent, which, by the way, beat estimates this morning, and ByteDance, for example?
Yeah, so they want to kind of basically completely revamp their AI platforms, rebrand it Qwen, which is their underlying AI model platform, which they provide mainly to business customers now, and provide a much more robust offering into the consumer market, and not just be a direct rival to things we experience with ChatGPT now, like it's a chat interface, but actually become a kind of fuller AI agent, and particularly to kind of leverage what they do on their e-commerce platform. So, as a consumer, you could say, I'm looking to go on holiday to Barbados next year. I want to stay in this kind of hotel, these kind of flights I'm looking at, and it would go away. It would find things that match your criteria, pay for it, and come back with a kind of fully fledged holiday for you. So, kind of really moving into that agentic area and do all sorts of things like that on this shopping platform. So, I think that would kind of really kind of raise the stakes for them in terms of kind of creating a new revenue stream, really kind of strengthening their capability in the consumer market, and I guess be a bit of a competitive hedge against what Alibaba, what Tencent and others might do in the future to kind of encroach on that e-commerce platform.
Yeah, and certainly helping those shares. I guess the idea of monetization getting closer, right? Can I ask you about Applied Materials, because it's after the close, another play on AI. It's going to make comments on wafer fabrication equipment. What do we expect to hear?
Good question. I haven't actually looked very closely at those ones yet. I guess generally, given there's been lots of ups and downs in the kind of the cloud and the chip market recently, I think it's kind of really just to kind of make sure that there aren't too many disruptions to the supply chain, and that we're still seeing kind of sustained demand come through from the kind of major customers for that kind of technology.
Yeah, we're getting close to the end of the season. Still NVIDIA to go, though. We have that to look forward to. Matt, thank you so much. Matthew Bloxham of Bloomberg Intelligence. Well, staying on earnings, Disney set to report fourth quarter results before the bell this morning, with investors looking for growth in the theme park and streaming businesses to make up for the decline in conventional linear TV. Joining us now with the latest is Bloomberg Intelligence US media analyst Geeta Ranganathan. So, Geeta, parks have been doing well. It does have competition from various other parks, but how much do we expect it to make up for some of the declines elsewhere?
Great question, Bonnie. Good morning. Yes, parks is absolutely the most important profit driver for Disney. Makes up about 55 to 60% of total company profits. So the big thing that we look for every time, in earnings is obviously the parks business, where underlying trends have been really strong. There's been the benefit of having a new cruise ship. We're looking forward to more cruise launches. So overall, things are going really well at the parks. The other business that we look for is streaming, because finally, after many, many years of losses, profitability has inflected, and this is going to be really a great source of earnings upside at the company. Now, the big thing that happened during the quarter that they're going to report was the launch of ESPN streaming, also called ESPN Unlimited, and any color that they can provide on the call for any early traction for that product, obviously, is also something that investors are going to look at very, very closely.
Exactly, and we had subscription price hikes there too, but also Disney looking to bring this to Asia. Now, I'm curious about this. How big of a market could it reach, given that we already have Amazon with MLB in Japan? Netflix also has next year's World Baseball Classic. So those types of sports are tied up at least. What can Disney do?
So Disney really has such a great brand name, Bonnie, when it comes to sports, when it comes to some of its franchises. ESPN, obviously the biggest sports property in the world. There's no doubt about it. Just ESPN alone accounting for about 35 to 40% of viewing across the US when it comes to major sports leagues. So it's going to be really interesting. I think just having the brand name, the Disney Plus name, the ESPN name, taking that to Asia, that is definitely going to help them penetrate a market where, there's just so much upside. As you kind of look across the world and you see all of the different pockets of growth, we are obviously hitting very mature markets in the US, in Europe, but Asia, there is just so much potential for growth. And I think that's going to be some really good investment areas by Disney.
Yeah, and fascinating. I mean, staying in Japan, Disney doubling down on anime and going to be working with a world-renowned game designer to bring, anime series and so on to its platforms. I mean, is this a money spinner? Is it better margins than, say, hiring a Hollywood cast and a writer's room and so on?
Oh, absolutely, Wani. That's a great point that you bring up. I mean, we've seen what a great, pop moment anime has had, even with K-pop Demon Hunters. We've had Demon Slayer. You've just had so many breakout titles in anime this year. And you're absolutely right. It is the most profitable genre when it comes to films. I mean, double what an average film would make. So there's a lot of potential there. We know that if they can use AI for post-production, even during production, they can cut content costs really, really dramatically. So this is, an area that resonates really well across the globe. And of course, as you brought up, the all-important point of profitability, which is what every media company is chasing these days.
Absolutely. Geeta, thank you so much. Looking forward to those results just coming before the open today. Geeta Ranganathan of Bloomberg Intelligence. Coming up, we're going to get you set up for your trading day with more earnings and Fed speak. That's all next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. First up, Disney reporting earnings before the bell. We also get Applied Materials after the market close. More Fed speak, Daly, Kashkari, Musalem and Hamak all throughout the day. And then the US federal budget balance will be released at 2 p.m. Eastern. The main news, though, Americans waking up today to an open government after 43 days. Let's take a look at some micro movers. Cisco, it gave an outlook that exceeded estimates thanks to the AI trade, up almost 7%. Dollar Tree suffering just a little bit, down about 3% here in the pre-market. Double downgraded to sell by Goldman. The analyst says any further upside for the retailer now gets harder. And Nike up almost 3% in the pre-market. Wells Fargo upgrading that stock to overweight on an improvement in visibility. It says it's lacing up for liftoff. Let's take a look at the macro picture, though, this first day of the reopen. A little bit of trepidation. Perhaps that's because we might be getting a flood of economic data. We might also be missing some data, for example, jobs and CPI for last month because they couldn't get collected. The US dollar is a little bit weaker. The yen is above 154 again today. And then the 10-year yield, well, it's just moved up a basis point in the last few minutes, 408.64. We're also keeping an eye on gold, which is rising, and silver, which is in sight of a record. That's it for Bloomberg Brief. Surveillance continues the conversation. This is Bloomberg.